Well, speaking of the yen in Japan, voters are on the brink of doing something they haven't done in more than 50 years, and that's change ruling parties. Sunday is election day, and pundits expect a landslide victory by the opposition Democratic Party, known as DPJ. If the party wins, it would replace the Liberal Democratic Party, or the LDP. What does this mean for dollar-yen trade? Well, Daniel Tenengauzer is joining us now to answer that question and a few others. Daniel is head of foreign exchange and emerging market debt strategy for Bank of America Merrill Lynch. Daniel, we're so glad to have you with us on set. Good morning. So you say the election results are just unlikely to change dollar-yen trade, right?
That's correct, yes. That's right.
And why is that?
Well, we think that a lot has been built ahead of the elections. That's the first thing. The second is that there are several dynamics that are happening in foreign exchange markets that are not necessarily related to the politics. And last is that there is very limited room for whoever wins the elections to actually do something.
Well, that's an interesting point, because the opposition party is really talking up the fact they want to support consumers, they want to just reassure some people in retirement versus spending on infrastructure. So they're looking to help the average person. At least that's the party line. You say that's a nice idea, but where are they going to get the money, right?
That's correct. The ratios are still pretty horrific in terms of debt to GDP and the fiscal deficit to GDP.
It's worse than the U.S.
That's correct. That's correct. All the numbers are higher. We're here talking about the U.S. increasing from, say, 50 to 70, 80%. Over there, the ratios are more like 100, 150% debt to GDP ratios.
Japan has had zero interest rates for 15 years. Is there any way under the sun they can create inflation there? Not now, but just even 3 years from now?
Well, that's a very good question. At least for now, we don't see that happening. One thing that could be very helpful for Japan is actually a commodity-driven inflation story, which is actually what happened last year. In that sense, Japan could use a lot of help from the rest of Asia, and that's probably one of the reasons why the yen is so strong here, is because this is an Asia recovery-led story, and that has been supportive for the yen.
Well, speaking of help from Asia, the opposition leader, who's a very charismatic fellow, I mean, educated in the U.S., seems like he sort of speaks well, dresses well, is very promotable.
Yeah.
He's been talking about the formation of an Asian currency. Again, not now, but it's his goal, he says, within the next 10 years. Is that a realistic goal?
Well, within 10 years, they might agree that they would like to have a common currency within 10 years. So it's a 10-year forward story, meaning, and that could have an impact probably 10 years from now, which is not something that is meaningful to my career. It might be good for my kids.
All right. If the election results and the political landscape in Japan is not really a main sentiment driver right now for dollar-yen, what is?
Well, a currency is always a two-way story. So it's not only about the yen, it's also about the dollar. And the truth is that the investors still see a weak dollar in front of them. And over the past few weeks, the story has been a weak dollar against the yen. That simply is the story. I don't think that people are...
Do you think what's driving that is just whether the dollar is the preferred safe haven currency or the yen? Is that one of the major themes?
It really is about Asia, people buying yen because of Asia and because they don't want to hold dollars. So that's what happened over the past few weeks, and we believe this is going to be unwound over the next few weeks.
Now, for the first time in 16 years, actually, dollar borrowing cost is lower than the yens. Do you see any significant, I mean, first time in 16 years, it seems like we should talk about it, right?
That's correct. That's actually very meaningful. If there is one thing that has been driving the cross, has been interest rate differentials, which is a new story. I mean, we haven't seen that, especially if you look at the forward chart. That's very impressive. But if at all, that has been driving the currency up until now, not from here going forward. So we think that going forward, things might change, especially with the so-called exit strategy taking hold here in the U.S.
All right. Daniel, we're so glad you came in.
Okay,
thank you very much. Daniel Tenengauzer there from Bank of America Securities-Merrill Lynch.